Good morning, Predicted Trades family. I hope everybody is doing well. Hope we're all ready for this super fun Fed day. Looking at the economic calendar, we have retail sales at 8:30, import price index, and then the big event today, FOMC, with Powell talking at 2:30. As we, if this is your first time with Predicted Trades during an FOMC event, we usually catch a little move in the morning, and then we're sideways all day, and then around 2 p.m. is when the fun begins, when they drop the statement from FOMC, and when the algos start to dance, right? We will be calling everything out at 2 p.m. when things start to move. Usually the first move at 2 p.m. is usually a fake out. So there are times that will pop up and then start to dive. Other times we will dive first and then start to take off. There are times when the first move is also not a fake out, where we pop up and then we dive and then we take off again, even higher. So we'll be calling everything out, reading it with Beast, and we could see some good opportunity here. I would say, from looking around at things and how hard we dropped after CPI last week, chances are that the market itself is pricing in a 3x rate hike, so basically 0.75 is what it looks like the market is pricing in for the FOMC statement today. So if we get a 50 point hike, 50 base point hike, or 75 base point hike, I think that is priced in and that the market will react favorably to that. If they actually announce, 100 base point hike, then we could see a little bit of a negative reaction. But I think at this point, from what I'm reading around and seeing, even if they announce a 75 point base hike, a 75 base point hike, that's kind of been priced in. So we're ready for that, so we shouldn't have any negative reaction to that. And, as everything is pretty much down near oversold territory, you can even see the low here touched where the third Keltner was the day prior. So kind of expecting, at least after FOMC today, a little bit of a relief to at least get back to the daily 8 and this 3900 before we actually start heading lower. And we can always get through the daily 8 and truck back up through the daily moving averages. So the nice thing is we have all of our key levels and inflection points to be able to play off of. Come on. There we go. As we come into today, we have a number of squeezes intact, 30-minute, 1 hour, 2 hour, everything getting nice and tight around our key levels, right? We still have this, I believe, 2-day squeeze, yes, intact. The bottom of which is now at that key at 37.41, which is where the 30-minute squeeze bottom is. And we do have the hourly and 2 hour just below that at the lows of the week. So we have support at a key level at daily and 30-minute squeeze bottom. Should we slip below this, we have even more support in these squeeze bottoms. Same to the upside, we have resistance at this daily Keltner at 37.90, where the looks like 1 hour squeeze top of it is also lining. So I could see us push up to this come back and settle to this, and then we just kind of chop around until FOMC. Should we get through the 1 hour squeeze top, the 2 hour is right at our next key level, 3807.5. That was previous low of year. We now have a new low of year. And just slap that on there. And look at that. It's almost like a jumbling up. 3807.5, 3708.5, right? So we have our ranges, we have our squeezes. You know what we teach. Play off of the range in these squeezes until it breaks to one side or the other. So as we are pushing hard into these squeeze tops and that daily Keltler at 3790, with a gap up, kind of expecting some rejection and coming back to fill the gap, and then just chopping, right, until we get FOMC. So there's your range and your key levels to play off of today for ES. And Q. Definitely the same thing here. We have our tight squeezes. Everything pretty much around yesterday's low, weekly low, and weekly high, right? So, just like on ES, I would not be surprised to see us reach into the squeeze cloud a little bit, probably this 11,500, and then start to fade back, probably to fill the gap and hold overnight low and the squeeze bottom. Even if the squeeze bottom gives out, we have the next one right below. And yeah, like 11,250. Right in the middle of all that, slightly higher than yesterday's low, might be the extent of how far down we go in our chop. But we kind of have our high and low from overnight set. Let's see if we reach outside it, just to hit these squeeze clouds during cash session, then fade back to shore up these numbers. Let's move on. Ready. Very similar. Looks like 1730, kind of the top of the range that we might be rejecting during cash session to fall back into chop and filling the gap. Need it to hold 1700. I mean, it can slip a little bit, but wanting to stay in this range. And that daily 8, really not all that far away. The Ready has a 50-point ATR. So even where it closed yesterday, yeah, it's a little outside of an ATR move, but it can get there today if FOMC reaction is favorable. Right now, it looks like NQ and the Ready are both kind of leading to the upside. Days when they move together are much more fun than when the Ready and YM move together. So, see what we get. But for YM, we held that, didn't quite get down to test it, but we stayed above 30,000 yesterday. Now our squeeze bottom around 30,200, a nice cushion from that 30,000. So basically looking for that to hold today, set a higher low, as we could potentially just chop around this 2 hour squeeze, waiting on FOMC. Let's see, with about a 700 ATR. Yeah, she can get back to 31,000 a day if she really wants. And, if we can get trucking and start firing these squeezes to the upside off of the bottom of a 2-day squeeze in oversold territory, We can, this is my first target to the upside. 31,500, where the daily Keltner daily 8 sit. I guess a little shy of 31,500, sorry. And above that, looks like the daily 21 is catching up to 32,000. So it could be, you know, a strong 2-day journey to get up to these liquidity levels. Apple. Apple's basically just stuck between this daily Keltner, which looks like it's the second Keltner down, and our key level of 132.6. We also have an old pocket 131 that we didn't even get quite down far enough to test. This 30-minute squeeze containing it and holding it. You can see this 30-minute squeeze started on Monday, held all the way until right now. It's still holding, right? So don't be surprised if Apple kind of stays in this range until FOMC data comes out. I would like to see it hold 132.6 most of the day just to look stronger than yesterday and lean to the upside. And we're already up near yesterday's highs in our pre-market highs. So wouldn't be surprised to see it try to reach up. It could even get as high as this week's high before falling back. You know, but basically expecting it to settle in this range during or running into FOMC, then start to break one way or the other. AMD. And guys, I'm going to just breeze through all these names because they're going to look very similar. Tight squeezes right at second Keltner down, right at key levels. Gonna probably stay in these squeezes until FOMC hits. But I'll run through each name just so we can all see where they're at. Even if you haven't purchased the tool belt, I will cover it in prep with these tools so you can at least be able to mark, right? But I highly suggest everybody pick it up. It's jam-packed with tools in the tool belt. So AMD, here's your tight range for today. Basically, 86 up to 89, expecting it to stay in between there till FOMC. So play off of the squeeze clouds when we're at the top, let it pop up, then start to short it back. When we're at the bottom, lock up your shorts and start loading into longs. Amazon held 100 so far, and starting to at least open up this 2-hour to be a little wider so that we have like 5 points to play back and forth on Amazon. So, overall, she dropped with market, but really not doing that much. Bouncing around a few points. So, let's see if market can get moving today. This could actually be a decent upside, and we're starting to get beast numbers on Amazon down in this new price point that it's at. So keep an eye out for that today. I think BA tanked hard, or no, actually it ripped yesterday. Wow, BA had a decent day. I only look at it because it didn't have any squeezes yesterday. So yeah, I thought I heard bad news on BA yesterday. It must have been good news. That got a little relief pop. It's already almost up to that first Keltner, so. But not a real interest in BA for me. CAT, settling at that daily 200. I talked about in prep this week how 200 is a big level, and whenever CAT gets there, it's a great spot to go long. But I said as we were settling down on this daily 200, which is this yellow line, we might not need to reach down to the actual 200 price point. We can chop around this daily 200 MA as they load back long to get to this 227 again. So keep an eye on that. As we go into today, it's still going to be chopping around that daily 200 at around 208. So a good chance for some longs on cat if you like to play her. Googly. Holding up at our key zone. Ooh, there we go. 2100 is pretty big on Google. And I had a little zone here at 2115, 2121, 2116 being the low of this week. So Google's doing a great job of holding a key zone. Already starting to gap, or having a gap up with the market and kind of already at highs of this week. So I like what Google's, setting up for. And it does have the split in a month, right? Exactly a month. So wouldn't be surprised to see Google start to lead to the upside, even getting back to its daily 21. Not that far of a journey. Only about 100 points on Google, which has a 80-point ATR. So definitely going to be keeping an eye on Google today, as long as the reaction FOMC is favorable and we can see some upside pop outside of to get out of these squeezes. Definitely going to be taking some longs on Google. 2300s, maybe even those 2250s. But yeah, I like what's setting up on Google. Should things start to break down, I still expect Google to hold its low of year, which is around 2050, and these key levels, 2100, 2088, 2073. So even if market starts to slip after FOMC on reaction, I'm watching Google to hold this 2 days. Ooh, hey. 2 day and 1 day squeeze bottom. In a simple thesis that she's going to be one of the last, mega caps to split in a month. I mean, we still have Tesla, which will likely be in August, but Tesla's not at $2,000, so definitely going to keep an eye on this. I know Amazon's split. It didn't really run into it as much as we were expecting. It did kind of run into it. But Google was like the tech leader for 2021, so I'm expecting a nice move into its split. GS. Overall, kind of a strong uptrend into yesterday. Market was kind of boring yesterday and did a lot of slipping. But overall, at least GS has opened up its 2 hour squeeze, so we have a little more room to play today. You've got this very clear low from the last 2 days, and highs from yesterday, making a nice range with these squeezes. So play the range till the range breaks. Well, yeah, we could start to see a little upside. Banks were weak, got beat up, already hit third Keltner. Need to see them start to turn around, so we could see a nice reversal on banks this week. Even JPM hit its third Keltner, and this 2 day squeeze bottom. Oh, stop. Yeah, so same thing. We could see a nice reversal and pump back up for banks. Meta. Bleh. Not a huge interest for me on Meta. At least for XLC, Google has a way bigger catalyst to the upside. And Facebook, Meta, whatever, just not getting any love. So not a huge interest for me. It's just going to move with the market, not lead. Microsoft. I do kind of like the way Microsoft is looking. It's already getting back up to this week's highs. So at least if tech is going to lead, I think Microsoft will be a part of that show. And let's see, we're about 10 points away from the daily 8 point ATR. So yeah, favorable reaction on FOMC and everything today could get us most of the way, if not all the way back to um, the daily 8 and this next Keltner up on Microsoft. Netflix. And, you know, I'm not only trying to talk about upside with FOMC today. Obviously, we can break down. We have third Keltner down below. That's going to be the target on everything. If we start to break down, and then past that, it's just going to be key levels, right? So if it's not a favorable reaction today and we actually fire some of these squeezes down on these names, look for those third Keltners and key levels below. Netflix. Again, not a huge interest. You know, you can draw trend lines from highs. I'll just give you an example. Just grab a couple of wicks here. Okay, that's good enough right there. You know, even if Netflix gets going, it's going to have to contend with some downtrends. Well, at least those sit up with the daily 8 and Keltner for today. So I don't know, not a big interest for me, but if you're going to play it, you know, play the 164 low, 170 high, back and forth till it breaks. And if we can get above 172, we can start to rocket up to this 183, 11-point ATR. Yeah, I mean, she could actually get to 180 today if things start to look favorable and market starts to pump. So, not a horrible setup. NVIDIA, a whole bunch of support here. And chips at least started to get some nice rotation to the upside yesterday. And already kind of near the highs of yesterday pre-market. So keep an eye on NVIDIA. Let's see, close around 158, 11-point ATR. Get up to 170. Yeah, she can reach up to this daily 8 today if things start looking good and we see good rotation into chips. So not a bad setup on NVIDIA and a tight little range to take risk and, you know, like we like to teach, play the range till it breaks and you can stack some little wins and leave some runners for when it starts to break, right? So not a bad setup on NVIDIA. QQQ, I mean, just like everything, tight squeeze, play the range till it breaks, 280 down to 274. With a 10-point ATR, she can get back to 285. And, you know, if we get a really good reaction at FOMC, she could even, you know, everything could arrive back at this first Keltner and daily 8 on a journey to get back to 300, right? So we could see a strong day today get us up near here. And if we have a continuation tomorrow, right back up to the next key zone. So Roku. Again, you know, streamers not looking like they're wanting to rotate into them just yet. So not a huge focus for me. But we are at the bottom of a daily and 2-day squeeze at this second Keltner. We still have third Keltner way below. So not as oversold as other things. And with a 8-point ATR. Yeah, I mean, it wouldn't be too hard of a push to get back to the daily 8 today or tomorrow if there's upside and she starts to fire these squeezes. So if you're going to play Roku, play this range till it breaks in a bid to get back to the daily 8. Shop. If you were in the room yesterday, we saw some interesting stuff going on with the Shop 350 call for this week. Keep in mind, Shop has a split at the end of the month. We only have 2 weeks left. And even Shop, you know, started with a high of around 320, hit a low of 297, closed, back above 300. Those 350 calls yesterday basically went from 220 to $2, slipped only slightly, like about 25 cents, but basically they stayed above $2 all day yesterday, even though she just kept slipping down. And that $2 was in the beast zone. So it can mean that they are loading those 350s on shop just because they did not let them die down while shop kept going lower. They basically propped them up. Once they hit $2, they kept popping them, even though we kept slipping lower. So some of us swung those 350s on the simple catalyst that she has the split coming. She's already been so beat up that they might want to make her, head back up before the split. We have plenty of room to get back up, well above 400. So keep an eye on those 350s today, just above that daily 8. As long as things are favorable in FOMC and we see some upside in the market, we could see some rotation into shop pretty quickly. 35-point ATR. She can get to that Keltner today with a little extra oomph. She can get over that daily 8. But let's just say she stops at that Keltner. And another day up gets her to the mean. So in 2 days we can get back to the mean. No problem. So just watching shop for that catalyst of the split that's coming in just a couple of weeks. It is the next one to split. SPX, mark your gaps, right? Because if things go well with FOMC, we will be coming to test them. Too many levels here to even. Oh, it's because I'm on that chart. Whew, that makes sense. Yeah, so on on SPX, we have been hugging third Keltner down. As long as things go well with FOMC today, we can see a very nice move back to the upside since we are so oversold. But yeah, mark your gaps and be prepared for when we arrive at gap fill levels for a reaction. SPY. SPY itself has a gap that should be marked up around this 386, 387-ish. But for today, SPY tapped that third Keltner 2 days in a row at the lows. Nice gap up. And here is our range with the squeezes today. 378, 380, and on the downside 372. So, like we've talked about for FOMC, would not be surprised to see a scenario where we come up and test these squeeze tops, slip back down, and chop into FOMC. We have seen days, I don't want to say we're just going to go sideways until 2 o'clock. We have seen days where it is a slow grind to the FOMC announcement. And as long as it's not a horrible reaction or horrible news that they come out with, that slow grind just turns into a quick dip and then a rocket right back up. So it's not to say that we are definitely going to tap these squeeze tops and just fade back in the middle and chop. We can have a slow grind up until 2, where we just slowly go up a buck or two, right? So just preparing for all scenarios, but definitely going to be watching highs and lows, squeeze clouds, you know the drill. Square, just going to skip over it. They're not rotating into it. It's not time yet. She's super oversold though, so could be a spot to potentially get some longs, maybe a week or two out. But for me, She's lost some of her luster. Tesla. We had some great plays on Tesla yesterday. Played the 7:30 call from about $2 to about 5 or 6 at the highs. And Tesla held those squeeze bottoms, got back above key levels, and bounced at them. Now holding them as these squeeze clouds come in. So as long as Tesla can hold this 30-minute squeeze bottom and these key levels during the cash session, we can see her try to push higher, get through 681 in a bid to get back to 700. The daily 8 has now caught up to 690 pretty much. In fact, it might even step down near the top of this squeeze today. So it wouldn't be hard for Tesla to get back to the daily 8 and be one of the first to arrive for tech. So I'm going to definitely keep an eye on Tesla. They keep buying her at this 657. It's what sent us up. Wow, it's been a couple of weeks now since I called that out. 657. Really? Time is flying, man. Got it. Yep, yeah, it was a couple of weeks ago on a Thursday that on this week I said, just don't touch Tesla till she gets back over 657. She got over it, and then the next day ripped up to 718, next key level. Then held 718 and ripped up to 744 and threw it to the mean. So we have set a higher low on the year on Tesla and holding at that same key level now. So as long as we stay above it, we can see a similar rip back to 718, which the daily 21 is now arriving to. But these are very key levels: 657, 718, 744, 780. Tesla's going to be slapping this range for a while, so keep playing off those key levels, using them for potential inflection points, since they continue to be inflection points. And last but not least, VIX. VIX, we saw it almost get down to our 2333. Then she reversed with that CPI reaction in the market and whatnot. Last week, shot straight up to 28, then gapped up. So far been holding the gap, but been pinned between this 3352 key level and basically the lows of the cash session, kind of where that gap starts. So for FOMC today, VIX is hugging the lows. Well, let's see if market has a little pop up into squeeze clouds first, which would cause VIX to come down further and test the actual start of this gap around 31.3. And 31, where that Keltner sits. Or VIX may hold the lows and go back to test 3352. That would likely cause most things to go back to attempt to fill the gap and test squeeze bottoms. So we have some squeezes setting in on VIX. Let's see how she reacts to 32. If it sends her back to 33.5, and if she can stay under 33.5 and break 32, we can see a little more upside on the market. If she gets above 33.5 and trucks higher to 35, we'll be retesting lows of week on most things. So tight little range on VIX to play today. If she can break down below 31, back to her daily 8, and to fill this gap, we could see things like Tesla get back to its daily 8, see the upside on the market, and some of those squeezes fire to the upside. So hopefully this was helpful for everybody. Thank you for tuning in. And for folks that are subscribed members of Predicted Trades, You'll notice today we have a new section where the beast tools will be distributed based on the different tiers. I made an announcement yesterday, so if you missed that, please go back and check it out. But it basically talks about how we are going to condense our tiers now with this new Beast 4 that auto plots on everyone's screen. So basically I'll be dropping tools in here every day based on these tiers. They will be slightly reduced tickers. So silver will have about 5 tickers, gold will have about 10, diamond will have all tickers. So we should all be prepared for that, and that's where we will be picking up the beast tools. I'm gonna, right after prep, I'll be dropping the gold and diamond so that everybody's ready and can import those. And then every day that I will be dropping new updated copies of that tool under the same name. When you import that tool, it may try to add, just talking about tomorrow, when you import that tool, it may try to add a 1 or something after it. You just need to delete that and basically overwrite the tool that you'll download today, and any chart that you apply it to will update automatically. So we'll walk through that tomorrow. But new distribution model today in these separate channels. And basically we are establishing these 3 tools for these 3 tiers. And hopefully within about a month's time or so, those tools should show up in everybody's tools section in TOS, the shared items. It takes like a month or so for them to show up for you in this received items area. So we're establishing it today in the middle of June with these 3 tools that will be updated, these exact 3 tools every single day, so that as you are importing them, they will hopefully start to show up down here within about a month's time. When that happens, I can push updates and it will show up for you as just update available, so we don't have to go downloading the link every day. So building that foundation so that the distribution is much easier in the future. But good luck today, everybody. Thanks for tuning in. If you haven't joined our server yet, there's a link in the description of this YouTube video. Also, if you visit our website, there's a link there for you to join our server for free, where you can start to learn about the Beast tool. Every Thursday we are in the free section, giving you a full showcase of what we have to offer. So if you're interested in joining Predicted Trades, you can join for free, and every Thursday get a free exposure to what we have to offer. But good luck today, everybody. Thanks for tuning in. And remember, no beast, no feast. See you in the chat.